Okay, so we're trying this all again, folks, after a false start due to a crash in the software. Which software? Got no bloody idea, to be fair. Because guess what? I'm not a technical expert on YouTube or Google Hangouts or anything of the kind. All right, with any luck at all, you guys would be able to see my screen at this point, and I'll start again. It is wonderful Wednesday, or hump day as we know it. And already we've had a few things happening in the markets today. Kicked off, of course, earlier on with an interest rate cut. Not forecast, to be fair, but kind of expected by a lot of people. And there's no surprise that the New Zealand Reserve Bank, or the RBNZ, if you like, did in fact cut interest rates. Now, in their statement, they've said that I don't know if they've actually said. I haven't read the statement. I've only heard a summary of it, but I'll get around to that. They've said apparently that they're not going to cut again, or inferred that they're not going to cut again, but they are going to cut again in 12 months-ish, or next year, or words to that effect, as I understand the commentary around it. That has caused, of course, a spike in the Kiwi versus just about everything to the downside, but a bit of a retracement on that spike. So interesting times that we are enjoying, or otherwise. I would think enjoying for most of the people listening to hear, because we've been I haven't personally, but the team has been telling us that the Kiwi is in dire straits, and this will be a bearish outcome with the monetary policy, and indeed it's more bearish than maybe some anticipated. And indeed, as I said, the official cash rate of New Zealand is now down to 1.5%, exactly the same as Australia, which is interesting in and of its own. It's not surprising, because they kind of go together quite a lot. And it'll be interesting to see how that pair actually performs in the next 24 hours or so. It's a fair bit at play, not just interest rates, but things like trade wars and China news and all sorts of things going on around the place that may affect both of those crosses, in fact, but probably more so the Australian dollar, which seems to be holding its own a little bit today against the yen, whereas others are not. Again, that's a little bit interesting as well. We'll probably have a yak about more of those things as we go through the day. Speaking of China and Australia, the trade balance out of New York, out of China, was pretty ordinary at 94 billion, where they're used to being up there in the 200s of billions. That's going to have an effect, one would have thought, but you've got to dig into the detail of that. And if you go into the detail, I think the detail from the commentary that I've been listening to this afternoon indicates that the exports, not surprisingly, to America are down substantially, but imports I didn't get a very good read on, so I'm not too sure about that. Maybe I'll have a chance to read it whilst the show's going on and see exactly what the detail is around that. But it's an interesting story coming out of China as well. It's not the end of the section today. We've got the ECB's MPM accounts, monetary policy meeting accounts, in other words, the minutes of that meeting, coming out later in the day, in around about 4 3/4 hours or something like that. That may have an impact. And of course, we've got the Bank of England's Monetary Policy Committee member Ramsden having a little chat. What's going on there? Due to speak at the annual European Post-Trade Conference in London town. The annual European Post-Trade Conference. There you go. Depend on the content of the speech, I would imagine, as to what goes on there. All right, let's have a look and see what the market thinks of all of that action thus far today. And have I got the Kiwi up? Yes, I have. Surprisingly for me, in fact, I'm stunned that the Kiwi is only off 6 pips in the last 12 hours. I've got to have a look at that. That doesn't seem right. But the big mover and shaker here is the yen today. As I said, not against the Aussie. I haven't got the Aussie yen chart up there, but the Aussie yen is holding its own, or was when I looked about 5 or 10 minutes ago. But the pound is losing ground dramatically in the last 24 hours against the yen, and even more, well, not more so, but there's a little bit added to that in the last 12 hours or so as well. Aussie's interesting. Aussie's really interesting. It seems to be the one currency pair, also I'd have to say the euro's there as well, wouldn't I, against the dollar that's faring okay at the moment. Of course, outside the yen, the pound is doing a bad day. You can see that, but the yen's going well. So yen strength, pound weakness. I'm a little bit on the side of the Aussie today. Having a look at that chart, we shall see as we go through, and maybe have a look at some charts. But the chart that I am interested most of all is this one, the FTSE. And it looks like I've still got this issue where I cannot expand my chart. Let me try that again. Oh dear. Tragedy. I'll work on that, but I'm sure we'll have a better look at the FTSE chart when we talk to Ash. Did you get in or not, mate?
You know what? One of them put me in, one of them didn't. So I've got obviously 2 accounts,
Okay,
and
I can't hear Ash. That's not good.
Can't hear me.
I'm having all sorts of issues here today. I assume you're talking to me, Ash, because I can see an effigy moving. I can't get out of here because I started. Oh dear. Issues are plenty, mate. I'll shut up and see if there's a setting here that I can fix, but I don't think there is, and I'll just let you chat.
Yeah, the other option is that I start. Let's try this. All right, let me just tell you this, mate. Right, I'm just putting a little message to Jeff that I start with that. Now we will talk about the FTSE because the FTSE is in a buy zone, and we might be able to get on for some upsides, maybe a little bit against the grain. Might not be the wisest of moves, but let's see. Yeah, okay, so we're going to come out. Jeff's going to cancel, and we're going to come back, okay? All right, we'll be back in 2. Sorry about this, guys. It's just technology. We'll be back in 2.